Gold is the top performing asset this year. It's beating the S&P 500, it's beating crypto. And currently the price of gold is about 3,500 US dollars. I don't think this boom in gold is over yet. There is still a lot of money to be made. When gold moves, gold stocks also move, and gold ETFs that track gold move as well. In this video, we're going to see those ETFs that you can buy to profit from this gold move. We're going to look into the gold stocks that you can buy in order to make a lot of money from this gold move. And also we are going to look at the structure of gold to see where it's going, how far it's likely to go, so that we can make the maximum profit. Let's get into it. With half a decade of experience in the markets, I've helped Profit Punch members spot winners like Appfolio, which did 350% in 2 months, SMCI 200% in 2 months, NVDA 200% in 2 months. Our newsletter doesn't just send you alerts, we also teach you all the necessary strategies and provide complete educational resources so that you can understand exactly why these trades work. Grab our free guide called 10 chart patterns that made me money and 10 that did not, using the link in the description below. This is the exact system we use to find these massive winners before they take off. The first thing is that we always want to have our weekly chart, and on the weekly chart there's a 10-week simple moving average and a 30-week simple moving average. That is to see the longer term picture. Then on the daily chart I have a 20-day exponential moving average and a 50-day simple moving average, and I feel like these are the simple indicators anyone can use to analyze a stock. Now if we see gold had this huge consolidation that took about 4 years, from 2020 to 2024, and these bases are always very sweet. When you see these nice flat bases like this and then you get this big time breakout, one thing that you can always bet on is you can get the length of that base, so about 4 years, and then you can get half of that time and use that to project how long the commodity or the stock is likely to run. This is just a rough estimation. It doesn't always happen, but this is just the case. If it sits for 4 years, then we expect it to run for about 2 years. It started running in March of 2024. That means it's likely to run till March of 2026. So there's a long way to go. We have several months to go, but that is not the only sign. If we look here on this monthly chart, whenever gold moves, silver moves. And I'm going to take you back in time when I saw this move. So this is a monthly chart of gold and silver. So we can see this huge breakout. So this is nothing new. It has done this in the past. But where did a breakout like this come from in the past? I think I saw that breakout in 1970s, right? So you can see it sat down for about 4 years as well, from the beginning of 1974 to about the end of 1977 or the beginning of March 1978. Then it ran for that long. And at that point, gold went up 376%. Crazy. No one at that time could believe that this was going to be the case. Silver did the same thing as well. Sat down for a while, and then silver went up about 700%. But currently, if we go to today, we can see that gold from that big breakout has only gone up 60%. So these are still baby numbers, and there's still a long way to go. And these commodities don't like to just top like stocks in a very simple fashion. Normally when commodities top, they top with very explosive moves. And I have not seen that explosive parabolic move in gold or silver. Now silver has not even started. That's why silver is one of my top picks. Once it breaks out, you can see on the monthly chart it's forming these nice consolidations. Once silver breaks out, I think it's gonna run like crazy because it has to catch up to gold. So, but that's for another video because I'm watching it, and once it breaks out, I'll alert people in the newsletter. Gold has done other moves in the past. So here it went from $300, it went up about 500%. So this is not anything new, these big moves. Here it has only done 60% from the breakout. I still expect it to run further because the technical analysis says that. Now, because gold is moving, the first thing that you can do is find ETFs that track gold. That's the first way to get exposure to gold, because for a lot of people, you cannot just buy gold outright. Currently, gold is forming a mini consolidation, and whenever these assets fall back to the 10-week moving average, which is a 50-day moving average, this is the time to add to positions or to start a new position if you're late and you already missed the move and you want to go in for the big ride. The first ETF you get is Shiny. A Shiny ETF is 3 times of gold, and this is my top pick. We can see here, this was the time to buy Shiny around $27, and it has already tripled in price for a very long-term investor. Now, if you're new, Shiny is setting itself up because it pulled back to the 50-day simple moving average. You can see this 24% pullback, which is a healthy pullback. And then now it's jumping and it's going to go up again. This is the first option. Second option is UGL. UGL is a ×2. So Shiny went up about 200%. You can see that UGL went up about only 124%. Because gold itself has very small movements, it's not a very big mover. If you jump into these ETFs, then you're going to get that gold move in a very exponential way, because we saw gold move 60%, but the 3 times moved about 200%. The 2 times ETF moved 124%. Those are the ETFs. If you want to know exactly when to get in and get out, you have to subscribe to the Profit Punch newsletter. I will send out alerts when they avail themselves. And there's also an educational hub for you to learn all about these strategies, because I'm not just here to give you these picks. For those who want to take the education further, go learn. I'll share everything that I know. And I also keep reading and learning, keep updating the resource hub with the new information that I learn about the stock market and commodities. Now, when it comes to stocks, they are gold mining stocks, right? And they try to follow the price of gold. But in stocks, you want to pick the best of the best stocks. Now, there might be over 20 stocks, but I'm only going to give you 3 because I feel like these ones have the greatest price potential. And the first one that I've already bought and I recommended is something called NGD. This is new gold. So you can see I already recommended it to investors in the Profit Punch newsletter. The first recommendation was around here at $372. This was kind of a swing trade, but it can also be a very long-term trade as we wait for the price of gold to go through that exponential run. So of course, a lot of people are already in profit. As you can see, that is a very good sign. The stock formed a 30-week base, and then we can see a very nice breakout on volume. You can see it on the weekly chart. We see something that looks like a cup and handle, goes down, and then here pulls back, breaks out on volume. See this very big green bar, then pulls back again, and then we jump in again. So this is a current long-term trade that I'm holding. It is a successful trade. NGD is the third choice. The best one is AU. The first buy point was here, a long-term buy point. Recommended in a newsletter. You can see the big cup and handle. NGD has moved late. AU has already moved from the original buy point. It's already up about 50%. That's even faster than the price of gold. But since it's a little bit more volatile, then it's not exactly the same, because gold has a 60% move, but you could have risked about 1%. This one has a 50% move, but you would risk about 6%. So in terms of risk to reward ratio, this has not caught up to gold yet, but you can see that the stock has set up in a very beautiful way. There's a buy point, it pulls back, right? Because when stocks break out, they pull back. That was a good point to buy. And then this was a swing trade recommendation. It is in profit right now, but for long-term investors, they could have bought here. If you want this trade recommendation, sign up for the newsletter. Now, the best of the best that has been going up like crazy for gold is HMY. So it already formed its cup and handle a while ago. The interesting thing is that these companies that are in the same sector, they are likely to have very similar setups. I'll show you what I mean. Here we can put 3 stocks instead of 2. Then I'll go onto a weekly chart. So we can have AU here we can have HMY, and then here we can have NGD, just as an example. You can see that all of them have very similar patterns, right? So here, what do you see? You see a cup and handle here, and it breaks out on 24th Feb, right? Around the week of 30th March. So also HMY has a cup and handle pattern. So this one went up about, 90%. This one from the cup and handle pattern went up about 50%. So you see HMY is the most explosive mover. This one also has a cup and handle, breakout, pull back to the breakout. You can enter again. And from the cup and handle, it has gone up about 36%. So it is the worst of these 3. So HMY is the top gold stock, right? For a long-term investor, you want to be buying it while it's jumping off the 50-day simple moving average, and then you can use that as your selling guide. Ideally, you could have bought here and then keep adding once it pulls back, and then you wait for the gold move or these gold miners to finish their price cycle. So right now, there are several ways to go about this. I do have swing trades, which is what I do sometimes, and I also have long-term trades when they avail themselves. So that's why I recommend those accordingly, because the newsletter has two tiers. There's longer-term trade options for those who just want to buy and forget about the stock. So it takes about 2 to 6 months, see your return. Or for those who are more active, you do the swing trading option, then you're going to hold for about 2 to 6 weeks. Let me say, it could even be a week. I hope you found value in this video. I hope you've learned more about how to analyze the securities, study the primary market, which is gold. Then you can either enter the ETFs, then you can look for related markets like gold miners, which we saw had very similar patterns, all of them. And then in those related markets, then you want to pick the best of the best stocks, and then you're likely to make the biggest return from those. I hope you found value in this video. May the markets be with you.